Hey traders, it's Leaf West with my second video for the night. This is on the spider, but it's not really about the spider in per se. It's really about having a trading plan and thinking ahead of what you want to do in a trade, what levels you want to enter, what levels you want to sell, and then sort of trying to create that as well as you can, and trading as much on autopilot as you can ahead of time, to take the emotion out of the trade, because that's the thing I've learned over the years is that the more you can plan ahead, the less you are doubting yourself or not taking trades because you weren't prepared. So I want to do that. So today, this is a 3 minute chart, by the way, of the spiders. We gapped down a little bit this morning, and I was carrying a short into the day from Friday, but I actually covered the short pre-market at levels a little bit lower than the market opened at, so that was okay. But I had a plan, and I try to do it every day. I have an outlook for the day of what I think is going to happen based on the waves that I see them on the higher time frame charts, and then drill it down to a tighter time frame. Hang on a sec. Sorry about that. Um, Getting back to the plan, so I try and put an outlook together for myself that I do publish as well for people to read if they want to read it. And it's not always right. Sometimes I think the market's going to go up and the market goes down, but and so you adapt to it. You change your plan and you go with how price is unfolding as the day opens up. But I thought I had a pretty good sense of what the market was going to do today. Here's a 10-minute chart on the spiders that I posted as part of my morning plan. And to me, we were in a fourth wave contractive sort of pattern that was showing like it didn't really want to go down on Friday. And in theory, what could have happened today, going into the day, with the possibility that price could just move back above the highs of this contraction pattern and go up into my fifth wave target. So that was something I was, well, I was prepared for it if that was going to be what happened first thing. But I thought more than likely what should have happened was to do a more of a normal sort of retracement of the last wave higher, and that I drew a grid for and I showed here that I was calling for sort of a step down into the 50%, 61.8% level, which was around 125, even 125.37 on this grid. And one of the reasons I thought that would happen as well was because of the gap from Friday. That a lot of times gaps like to be filled before you move higher. So that was again in my thinking. But again, I was a strong believer that we were in a wave 4 correction and that we were going to move higher. So as that as a backdrop, you can see as a trader, knowing that you have more confidence to take trades getting long at certain levels. So keep that in mind when you're planning your day out. I'll put up the next chart here now. Later in the morning, I put out a afternoon trading plan, which is how I like to look at it. I like to look at the morning and go in there with a bias or a sort of a plan and see what happens. And more, half the time it does something else. So that's fine. But once you have actually established half the day in the books or part of the day in the books, you get a better sense of what could happen in the afternoon, much more than coming into a day from an overnight situation. So this is what I was sort of projecting for my afternoon plan, was that we had pulled back, made sort of a triangle, kind of a wedge, and that we were gonna pull down into that 125 level and then move higher. That was my plan. Was that again the higher bias? This being a fourth wave, and that we were going to find a bottom eventually. So I was looking for areas for support. So I was extending patterns, drawing grids, and looking for logical spots to get long. And that gives me the confidence to pull the trigger at levels when the market on a tighter time frame shows me that it has that possibility in play. So actually, after I started a long trade in the spider, I put up this chart. But what happened going into this knowing my levels, knowing the Fibonacci level generated by the opening range being 125.04, I actually had a limit order in to buy at that price and got filled. And again, what I was able to do that because I had, very strong confidence level that that could very well be a level that the spiders found support at and started to move higher. And again, if you think back to what I said about this being a fourth wave, I'm thinking that we're going to start a fifth wave at any time. So this could be a huge trade. So it's little risk for potential big reward. And again, I don't start, especially when you're picking a target level to start a trade at. I don't start with a full position. I start with a quarter of my regular normal sort of starting position. And the plan was to add, 3 more times to this trade, sort of to get into a full starting position before it was to break out of the pattern. Then once we broke out of the pattern on the pullback was to basically to double my position in the spiders, and then at the first target based on this grid was to take half off, take your profit, lock in some profits, reduce your exposure, reevaluate, and then add at other sort of opportune times. So that was my plan. So if you look at it from that perspective, it's all very logical, and as it turned out, I did these 3 ads at basically these 3 levels of prices. But again, you can adapt your plan, and so once I got filled on my fourth portion, the third fill going forward, I decided actually to sell all of my holding at a price that was it still generated a profit, but it was actually below my last adding price, based on how the market was trading. Again, so I adapted my initial plan for how the market was trading. Before we got to those levels where I started adding, price was moving slowly off of the low that had been set earlier in the morning. And again, once we pushed higher and we pulled back, I am looking at levels where we could find support, and where the price could turn around and start generating grids and start projecting wave targets off of that, so that when the market does something unexpected, I can be prepared. Or if it does what I'm thinking it can do, I'm prepared to add to my trade, because if it's doing what you think it's going to do, then it's working how you think it's going to work, and that's when you want to double down on your trades and increase your size and take advantage of the high percentage chance of making money. As it turned out, so I got all of my ads into this sort of shooting star candle, and once we started to chop a little bit sideways there, I just had a feeling from how price was reacting that this wasn't the action of a sort of impulsive move higher. It looked like a corrective move off of the bottom. So to me, I was right to sell my position with the thought that I could always add it back if it turned out to be an impulsive move and was doing what I thought it would do and move higher. I could always add, but I put in place in my mind and on this diagram, and I tweeted it, was a plan that what if the market rolls over and it doesn't go higher, and it rolls over and takes out the previous low. I wanted to know where I would be able to find support, where I should potentially add to sort of a capitulation sell-off, because again, I'm thinking this is the fourth wave. I don't know exactly where the final low is going to be, but I think it's the fourth wave, and it's going to move higher. So I want to get long. I want to get long this trade, but it felt to me that wasn't the right thing to do, to hang on to that trade at that time. It felt like wait for either a further sell-off or additional strength, proving that it was going to go higher, and that I would be better off doing that sort of thing. So again, this was plan B. What if market rolls over and dies? So again, next chart I tweeted, watch price, evaluate what the price is doing, and base your new plan on what it's doing. So this is slightly after my last chart that we just looked at. And I looked at the sort of retracement corrective bounce from the last move down into the low of the day. And to me, we didn't even get up to the 61.8% level, which is to me is a very key level. We got barely above the 38.2% level. We made a double top, and was working our way lower. So my plan was to, and I think I actually tweeted the chart on that. But my plan basically was to let the market show it was going to sell off, and then when it failed on a bounce attempt, to short it. And my thought was we were going to take out the low of the day and take out the stops that are sitting right below that level. And I drew a projection based on that. And again, that was the 124.71 level that I was ready to get long again, the spiders. So again, here's the chart that I tweeted on that, more specifically, because I drew a grid and where you like to see when a price breaks a grid. Again, it generally will pull back into the grid before it rolls over and dies its death. It sometimes can get up above the 38.2, but generally it gets in that first sort of gap area. So that's what I was looking for to short. I was looking for 125.30, and as it turned out, price did not. Here's a 3-minute chart now. Price did not get back up in that area. It just sort of broke the low and kept sort of grinding lower. And I was actually, if you go through my tweets today, I was dead spot on what was happening right around this test of the previous low, and including the fake sort of successful retest of the low, and then the push through. What I wasn't sure of, though, was whether or not there was enough stops below this low from previous in the morning, whether there was enough stops in place to drive the selling harder and drive it down to that 24.71 level where I had a limit order, and I put a limit order in to buy at that price. But I also tweeted, and my plan was that if we couldn't do that and we pushed back above the 125.04 level, I was willing to go long there, because what happens when this occurs, people short the hell out of the stock or the ETF or whatever you're looking at, thinking that you broke the previous low, and now the shorts are going to step on this thing hard. And if it doesn't happen and it reverses back up, all the shorties that shorted the stock at around 125 are going to have to cover. And when they cover, they drive price higher. And when they drive price higher, that covers more, that activates more stops, and it attracts people playing the bounce higher. So it can be quite a nice squeeze. And I won't go through all the trades I did. I went in and out about 5 times, it feels like, on this move higher above the 125.04. And net I made money doing that, but I made again, well, I guess the one trade that sort of stuck out to my head was if we got above this 125.60 level, we were going to really squeeze in for the last half hour. And I actually bought a small sort of portion again when we broke that 125.60 level, and it didn't work out. And again, I normally I don't buy the breakouts. I wait for the retrace, and I actually added to it on the pullback. But anyways, the chart's already, the video's already at 13 minutes here, so I'll cut it off. But again, the idea of this video was to show how I trade during the day, and it's not the only way you can do it. But I think really traders can learn from other traders in what they do that helps them be successful. And I think this helps me be successful. And you can see by just the levels and the calls I was making today that it really does add value to sort of plan ahead and measure waves and do your Fibonacci retracement grids and etc. And anyways, I hope that helps, guys. All right, see you tomorrow. Talk to you tomorrow. Bye.